The broadcast is now starting. All attendees are in listen-only mode.
Before I start, right, can I have a one or yes if you guys can hear me? Just a quick one or yes. All right, that's great. So today we'll be doing our introduction to candlestick patterns, right? Japanese candlesticks patterns, right? So we'll start level 5, right? I think this is a pretty important topic, right, for those who are actually trading using pure patterns, right, or pure price actions. Right. So we'll go through this one relatively more in depth. For those who have been following me, right, for quite some time, I see quite a few new names actually, right? So just a brief introduction about myself. Right, my name is Shichen, and how I do things like is normally right. I will start off with some fundamentals because I think fundamentals is pretty important, right? For the bigger picture, right? And then I'll look into whatever topic we are having today, right? Then after looking into the topic, right, we'll go through some charts and then I'll entertain some questions in which you guys have, right? You guys can ask any questions about trading, be it about stocks, about some macro events or macro news, right? You guys can go ahead and ask me, right? And also, right, if you guys have anything which I cannot get back to you today, right? For example, if you guys want to know about intrinsic value of a certain company, right, then certainly, I can get back to you on the next webinar, right, if you have time. So this is what I normally do, right? So we'll start level 05, level 10, right, and then we can continue. So be patient with me a bit, right, while we wait for more attendees to come in, all right? All right, guys, so let's get started. Right, so because I see quite a few attendees who actually joined. Right, so for the first thing we want to look at is actually some of the more important events which is going to happen today. Right, so the main event is obviously CPI report, which is happening on 8:30 Singapore time. Right, and for inflation report, you can expect about 9% inflation. Right, I mean here, right, 8.4. Right, year over year. This is the Wall Street expectations. So anything above 8.4, right, about 8.6 or 8.8, okay, it's a long for gold and a short for DXY. Okay, honestly, I expect it to happen, right? It's because of, rising energy costs and commodity prices. Right? So somehow, the cost burden of businesses will be pushed onto consumers. And in that sense, right, you can expect, the price to be relatively high, right, for CPI report. Okay, so I expect something very close to 8.6 or 8.8. Okay, if it's 8.4, right, if it's within expectations, okay, you can expect prices to be the fluctuations in gold and DXY to be relatively small, right? Maybe a $10 movement for gold, right? And if it's above expectations, you can expect quite a huge spike up, right? Probably you have to look at our next daily resistance level, which is 1965. When you look for any break, right, in this resistance level, okay? So this is what I will look at, right? I actually expect to break to probably go to the 2000s, okay? Look our daily overlap resistance. So you can see that it's at the 2K 2009 mark, or rather I'll give you a psychological level, which is about 2000. Okay, so 2000 is, it's about 2000. Okay, so if we break this resistance, right, you can expect to go to 2063. This will break, right? I'm pretty certain that this resistance level here won't break unless the report is really insane, like probably like 10 point, probably a 9+%, which I don't think is going to happen. What I think is going to happen is about 2000. I think that's a relatively good a good resistance, right, to actually long to, right? I won't suggest a short for today, right, unless the report says so. So anything below expectations, anything below 8.3, right? So what do we see again? Anything below let me see, 8.4%, right, is a short, okay? It's a short for gold and long for DXY. But right, I'll say it's just a temporary short position, okay? Don't go in for so long. Maybe just go for the next 4-hour support or something like that. Okay, so this is something you guys have to look at, right? So looking at Monday, right, we have this China inflation data, right, which is the reason which I formed that, the inflation data for US is going to be relatively bad because even in China, where, inflation is relatively well controlled, right, because of their personal economic problems too. Right, the fact is that, it's at 1.5%, which is above 1.2, which is Wall Street consensus and forecast, which is greater by 0.3%, right? So even in China, where inflation is relatively well controlled, you can see that it's a bit out of hand right now, right? So you can see that USA, which really know that inflation is not controlled very well, right, in the sense of the monetary policy and stuff like that, right? You can see that it's already at 7.9, right? You can expect easily anything above 8.4. Okay, so this is something that you guys have to look out for. For tomorrow, right, it's the same thing, right? Core inflation data for pound or for UK, right? What you can expect is also the same thing. Right? I don't expect inflation to subside anywhere. Right? So if you guys didn't know what Euro and UK is looking at, it's actually high inflation but low GDP numbers. Okay, and we call that stagflation. So stagflation means low growth and high inflation numbers, right? And it's very detrimental to growth. Okay, so this is something that both UK and Europe is looking at a macroeconomic aspect. Okay, so next thing I have to look out for is the Bank of Canada interest rate decision, right? Interest rate decision in the sense that whether it's going to tighten or going to go for a small loose monetary policy. But obviously, we all expect a 1% DP, right, which is a 0.5% or 50 BP rate hikes, right? So if anything above 50 BP means Canada or CAD is going to strengthen, while anything below 50 BP means that CAD is going to weaken. Okay, so something very simple to look out for. Okay, so for today, we'll just look at some candlestick patterns, right, and chart patterns and bullish candlestick. Okay, so I went through this topic quite a few times already for those who have been my regulars here, right? So the fact is that, right, it's so important, right, to know what does each individual candlestick means? Can you explain forecast, previous, actual? Okay. So I see a question asking me to explain what is previous, what is actual, what is forecast. So a very quick one. Okay, so actual is the actual report, which is happening today. So it's going to show you any economy data, and that's your actual data. Okay, for forecast is Wall Street expectations. Okay, so the reason why I always say Wall Street expectations is very, very important. Okay. So Rafi is new to my webinar, right? If I'm not wrong, I never see a name, right? I actually conducted webinars like 3 weeks or 4 weeks ago, right? So I'm back, right? So yeah, let's follow me more, and I'll explain to you more on this. But for now, let me give you a very brief explanation. Okay, how do I know when to buy or when to sell? Okay, you think about it this way. Okay, for actual, right, it's actual economy data report. Okay, for forecast is Wall Street expectations, and for previous is the previous economic data report. Okay, so normally we don't see what is the previous one. What we see is we see Wall Street expectations and the actual data. So you ask me, why does Wall Street expectation matter so much? Wall Street expectations means, the expectations of those economists, of those bankers and stuff like that. Okay, so imagine it this way. Imagine that you know that a house is $60,000 this year, right? And your expectations for inflation is 10%, right? Okay, let's just give you $100. $100 is much easier. Okay, the expectations of you want to buy something and it costs $100, but because of your inflation expectations at 10%, you will know that you think that the thing will go up to $110, right? So everybody will go and buy these goods for $100 because they expect something to go up to $110, right? And this is called the Wall Street expectation, or this is called expectations. So expectations of inflation of 10%. Right. So if you think about it this way, let's just say there's already real inflation in the market, right? And now you have these inflation expectations of 10%, right? So let's just say that real inflation is at 7%. Okay. So actually inflation is at 7%, not at 10%. Right. But you think that because everybody thinks that it's at 10%, right? So it's going to push the price up to $110 regardless, right? Regardless of real inflation, which is at 7%, which is $107. Right. So this means that, right, what expectations can cause real inflationary pressure, right? So that's why we actually look at expectations before Wall Street data, right? That's why expectations play such a big part, in our analysis. Okay, so how do you trade it? Okay, so very easy, right? Anything above expectations means that, anything above expectations means that if you're looking at gold, right, it depends on what report you're looking at. Right. For example, let me give you gold. Okay. I think gold is the easiest to explain. Okay. Gold rises with inflation, right? And, if there's no inflationary environment, right, it's going to drop or going to dip, right? So we know that, right? So let's just say that expectations is at for this case, 8.4%, right? So anything above expectations is a surprise to Wall Street. And a surprise to Wall Street is the bad news in the sense that, you're going to push the prices of gold up. Right, because it shows that inflation is greater than expected. Everybody's going to panic. Everybody's going to buy gold, right? Because gold is a very good indicator of inflation. Right? So anything below, right, expectations is just mean that, hey, everything is within control, right? The market is already priced in. Right? Gold prices at 1956, right? So everything is going to be okay, right? So everything is priced in, so there's no big shock to the market. Right? So this is how you actually use expectations to trade, in the sense that you need to see actual is above expectations or actual is below expectations. And from then you form your own price buy-in and stuff like that. Okay? So I hope that this brief explanation is good, or is can be used, is very well equipped for you. So I don't know whether you get my explanation or roughly, right? But if you don't get it, I can give you another example, right? Or maybe on another currency pair. So do get back to me, right? Or whether you get it or not. Let me wait for his response. Is there anybody else who don't get it? Because I think trading on economic reports is a pretty accurate way to trade. Yeah. If you are a fundamental trader, right, and if you're very good at reading economic report data, I think it's a very sure way to trade, right? Obviously, there are times in which even the economic report shows you mixed signals, and that's the point in which you should stay out of the market. Right? So some of the most prevalent or most common economic report in which we trade in is NFP, which is non-farm payroll. But I think that's a pretty hard one to trade. I think CPI report is very easy to trade. And I think FOMC meetings are very easy to trade. Okay. Interest rate decisions are very easy to trade because anything above expectations, anything tightening above expectations, right, is buy, right, for a currency, because it just shows that currency is going to appreciate. Okay. So I hope that you guys get what I'm trying to say. If you guys don't get it, right, we can just move along the way, and eventually you guys get it. For those who are regulars, I'm pretty sure you guys get it, right? So just be patient about this, right? I think about 1, 2, 3 webinars, you guys will be able to understand where I'm coming from. Okay. So let's just go on to our PowerPoint slide. So to me, right, I think that candlestick patterns is the most important, right? So obviously there are a lot of trading styles. Sorry, there are people who use, okay, let me just give you some examples of trading styles. Sorry, since I see there are some quite new people here, right? So there are people who actually use pure price actions to trade. So what does price action means? It means that, using trend lines, using support and resistance, and using candlesticks patterns. Okay, that's how I trade, and I think that it's relatively profitable, right? If you know what you're doing. Okay, so there are people who actually use pure indicators to trade, right? Such as Ichimoku cloud, such as Fibonacci lines, right? So there are people who use two confluence in the sense that 2 criteria to enter for a trade. There are people who use three confluence in the sense that people who use 3 criteria for a trade. So for me personally, I use 3 criteria for a trade. So example in which I use, or the things in which I use, is a bounce off a strong support line, right? And then I'll look at the candlestick patterns, right? And then maybe I'll look at some form of EMA, right? So I'll look at what kind of support line it bounced off for. Is it a 4-hour? Is it a daily, or is it 15 minutes? So if it's a daily support line, it means that, the bounce is going to be pretty strong, right, compared to a 15-minute support line. So that's how I normally trade, right? So normally I'll go in for trades at breaking of trend lines, at support levels, right, at resistance level. Rarely I'll go in for a trade in the middle of a support and resistance. Right? So if you think about it this way, right? So what I'm talking about is that normally I'll trade, when price touch a support line, right? Then I'll go in for a trade, right? So if, right, let's just say this candlestick breaks, my support line, I'll close this trade off. Right, if you bounce off, right, good, I'll go in for the next resistance, right? Then once it touch my resistance, I will close my position. Okay, be it whether I think it's going up or not. So I'll wait for, right? Let's just say I'll continue the trade, right? So I'll wait for this resistance, right? So if I think it's going up, right, I'll wait for a break of this resistance before going for a trade again, right? So this is how I normally do things, right? Price action is pretty easy, right? It's just a matter of just practice and practice, right? Eventually you'll get it. Right, so for those who are new here, right, my suggestion to you, right, is actually to go for 10 days green, right, demo account first. Okay, why is this so important? Right, is that if you're 10 days green on a demo account, please treat your demo as similar to that of the live account. Okay, so what I'm saying is that the frequency of trade, if you actually frequently trade on your live account, for example, you trade like 2-3 times a day, right, or 4-5 times a day, right? Then you should, right, trade 4-5 times a day on your demo account, right? And the aim, right, is actually to achieve 10 days green, right? And this 10 days green, right, will be a sure way to know that you're profitable. Okay. And by the way, 10 days consecutive green is very hard to achieve, right? Even at 7 days, I would say that, yeah, you're good for a live account. Okay. So this is something very important. Okay, so let's just look at some patterns. Okay, if you guys have any questions, just feel free to stop me anytime. Okay, guys. So bar charts are often referred to OHRC chart. Distance from high to low represent the range. So if you guys didn't know, right, candlestick patterns also something like this is the high, this is the low, and this is the range. Okay, but this shows you the high and the close and the low. Okay, it's a bit different in the sense that way. I don't think bar charts, anyone use it? Does anyone use bar charts here? Right. I think most of us use candlestick patterns, so I'll just go through this pretty fast. No one uses bar chart, right? Right. So this is something like a bullish engulfing candle, right? So if you actually change this to a candlestick pattern, it's something like that, right? So this is a green candle. Imagine that this is green candle and this is a red candle. Okay, so this is a bearish engulfing candle, not bullish. I mean bearish engulfing candle. You know, when the red clearly overwhelms the green candle. Okay. Right, so this is the bullish engulfing candle, right? So if you see on a candlestick, Japanese candlestick pattern, this is a green overwhelming red candle. This is pretty simple stuff, right? You guys don't have to worry about it too much. So this, right, for this a double tweezer, and this should be a double tweezer bottom. Okay. Because I don't think anyone actually frequently use bar charts to trade. So I'm actually changing this to candlestick patterns, right? So let me see, how easy for you to read. Okay, obviously different kind of bar patterns or candlestick patterns, or some people use what's that called? Line, is it? They all show different stuff. Okay, so you guys don't have to worry about that. So so let me give you a reason why we're actually learning this first, okay? So the reason why we're learning this is actually because if you actually understand what does each individual candlestick means or shows, right, you have a very better understanding of how to actually go in for trade. So let's just say that you have a very long green candlestick right here, right? So what does this mean? It means that, it's very bullish, right, which is very obvious, right, which you can see the entire body, right, is the candlestick, right? So let's just say we change it, right? We change it to something like a very long red candlestick with a full body. So obviously this is a body and this is a wick. Okay, so if a full body, it means that this is very bearish, right? Something very simple, right? So let's just say we change it now again. So let's just say that we are at we have this, right? Let's just say we have this, right? And this is green color, right? So this shows that prices actually go down all the way to this level right here, right? And then there's a lot of buying pressure pushing this candlestick upwards, right, thus causing it to form into this body right here. So we know that buying pressure is relatively high at this maybe support level, right? So you can expect, it to be a form of a reversal or maybe one sign of a reversal. Okay, so this is something that I think that is very important for you guys to understand. What does each individual candlestick means, right? Before we actually look into patterns, right? So normally, we don't trade onto one individual candlestick, right? Rather, I would say that one individual candlestick can just shows you, what the market is feeling right now, or what the market is trending to right now, right? So if you think about it this way, right? So if you think that there's a lot of buying pressure, right here pushing the price up, right? Then we're going to wait for confirmation. Right? Confirmation can be a morning star, right? So what is a morning star? Morning star is something like that, right? Or maybe inverted hammer, right, or something like that, right? Or shooting star, right? All these are candlestick patterns in which you guys will know eventually, right? But these are just some examples and some reasons which why I think that candlestick patterns and the individual candlestick patterns, individual candlestick is so important for you guys to understand. So let's just say, what is this? This is a doji, and doji represents indecision in the market, right? So buyers and sellers are 50-50, right? Are both in control. Right, so let's just say you see a very bullish sign. It means that buyers is greater than sellers. Right, thus you see a very bad bullish candlestick. Okay, so something like that. Right, so for now, I hope that you guys understand what I'm talking about. Right, can I have a bit of response in terms of do you guys get what I'm trying to say, or if you guys have no idea, right? I can just easily go more in depth into it. So can I have some response in terms of, understanding? Right? Do you guys get it? Just start with a yes or one will be good enough for me. Yes. Hi. Right. Yes, it really depends on one time frame. Okay, so talking about time frame, right? Since HS is on the topic, right? He's my regular, so I think he understands what I'm always trying to say. Right, so for 4 hour, right? Let's just say you see a reversal pattern on a 4 hour chart, right? And you see a reversal pattern on 15-minute chart. this reversal pattern is more confirmed, right? The probability of this happening, right, is confirmed higher than the 15-minute chart, right? So let's give you another example, right? So if say 4 hours, right, and a support in 15 minutes, obviously the support in 4 hours is going to be stronger than the support in 15 minutes. Okay, so it's very important for you guys to take note of what kind of support levels, right, on which time frame, right, what kind of candlestick patterns on which time frame. So let's just say you see a double bottom, right, on a 5-minute chart. Okay, so in the trader stance, we always say that the 5 minute double bottom, might not be as strong, or maybe it's not as valid compared to a 4-hour double bottom. Okay. Just 15 minutes give you weak. If you switch to lower time frame, it's actually not. Yeah, that's true. Right. But I always say that it's very important to trade on your own time frame. Right. It's very important to take note of your 4-hour support levels and resistance level. But it's also very important to trade on your own time frame. So let's just say you are trading on 15-minute chart. Just take a look out for 15-minute chart, right? As long as you draw your support levels, your trend lines and stuff like that, right? You don't have to worry about the other levels. Okay. I'm pretty sure that you get what I mean, HS. Yeah, so this is the same, right? I won't go through this as much. So in this candlestick pattern, right, this is something like that. Okay, so what does this mean is that price actually reached all the way to this level, right? Then there's huge selling pressure pushing the price downwards, thus forming something like that. Okay, so it's the same as candlestick patterns. So this is the same thing, right? This is something like that, which I showed you just now, right? So this means that price reached all the way down, right? And then there's a huge buying pressure, thus pushing the price upwards. There we go. So we are back at Japanese candlesticks. Right. So why is Japanese candlesticks so useful? It actually help to identify trend continuations and reversal. Right. So as I said, right, if it's a bounce from let's just say a support line, right, and you can see that there's a huge green candle afterward, it just means that hey, it's very bullish right now. Okay, so this is pretty simple, right? So I think that you won't have very huge. Okay, so anatomy of a candlesticks. Okay, I think this is very important. Right? So this is where, okay, so if you know that 15 minutes closes at 4:15, 4:30, let me just give an example, 4:45 and 5 o'clock. Right, so every 15 minutes, you will see the candlestick pattern close. So why is it important to know what does a close mean, okay? So let me give you an example why I think that all these timings are very important, okay? So let's just say you have this resistance line, okay? And you don't know whether the next candlestick will break this resistance line or not, okay? So let's just say that, during this 15 minutes interval, right, you see that, prices keep fluctuating between breaking and not breaking. So how do you know that is it going to break or not? Okay, very, very simple, okay? Very simple, guys. Okay, my suggestion to you is to never close your trade or try not to close your trade, while the candlestick is still playing out. So while the 15 minutes interval is still playing out, don't close the trade. Okay, my reason is very simple. My reason is because, right, there's a sense that there's a cases that, prices might just weak, right? So let's just say, imagine that prices have been just fluctuating like that, and stuff like that. Then eventually, right, at the 15-minute close mark, right, when the body closes, right, you can see that, it's just a wick, right? So when this wick shows is that actually it didn't break resistance level. So if you want a sure way or guarantee understanding, whether it break a resistance level, you need to know that the body has to break the resistance level before it's actually counted, right, as a breaking of resistance level. I hope you guys understand what I mean, right? In the sense that, the body must break the resistance level before it's actually counted as a true break of a resistance. Let's just say it's just a wick. Right? Let's just say it's just a wick, right? This wick right here. Let's just say it's just a wick, right? It's not counted as a breaking of resistance level. Okay, so this is something that you guys have to know that I think is very important. And a closing, right, only occurs every 15 minutes interval, right? If you're trading on 15-minute chart, if you're trading on 4-hour chart, then it means that it happens on every single 4-hour interval. Okay, guys? I hope that you guys can understand this, right? For now, but if you guys don't understand this, I can go more in depth into it. Can I ask, how many of you guys, okay, I see quite a few regulars, but I see quite a few new names too. And for those who are new, are you guys new to trading or completely new to trading, or you guys have actually tried it for some time, and not profitable, or you guys are actually profitable? I hope to get a few response on this so I can understand my audience better, right? If you guys are relatively new to this, right? Yeah, I'll try to be more in depth. For HS, have you been profitable? Have you tried your live account, or are you still using a demo account? Can we get 10 days green actually? Still practicing. So what's your highest consecutive day? Yeah, column. Okay. All right. Still using price action, right? I still think that's the best way to trade actually. Are you trying other methods now? That's great. Okay. So I understand that some of you guys are new, right? When you guys get some weight, right? You guys will be very, very, just think that your trading idea is wrong. But I beg to differ in terms of that, okay? In the sense that you guys don't have to worry about that, right? Because even I also get some weight, okay? So the point is that the point of trading is about a game of probability, right? So even if you have a 70% probability chance, right, that you will hopefully get the market right, there's a 30% chance that you will get a rate on, right? So in the sense that it's okay to understand that sometimes it's okay to close on a rate, right? It's just a matter of how much stop loss do you should have, right? I think as long as you get a consecutive green days and you feel good, right, HS, right? I think it's okay for you to go for a live account, right? What do you mean R? Sorry, I'm bad at short forms. Reward is about 2 to 1, right? I don't go for 1.5 to 1. I go 2 to 1 to above anything above 2 to 1, I'll go. So later I'll give you an example of gold trade in which I have planned for later for CPI report. Okay. So later I'll just give you guys a very brief one. If you guys want to follow, I don't know. Right? It really depends on the trade which you're looking for. Sorry. Eager to move on, right? So this is known as the upper shadow, this is known as the lower shadow, right? And this is known as the wick, and this is known as the body. Right, so normally you open here and close here, right? So this is the low in which the prices went to during this 15 minutes interval, and the highest price in which the candlestick went to at the 15 minutes interval. Okay, right? Well, we still have quite a lot of slides actually. So doji, as I said earlier, suggests indecisiveness, right? So in the market, so any bias depends on the previous trend, right? And let's just move on. So obviously different kinds of doji, right? This is known as the classic. This is known as the long-legged, and this is known as the gravestone and dragonfly. I don't see these two often, right? I don't see these two quite often, but normally it's just a very brief understanding of it. So this is a bullish and bearish engulfing pattern. Some people use it to trade. Okay, so how do people use this to trade? Let me give you an example. Okay, since I said earlier that you need 3 components to go in for a trade. Right, so the first component can be a very strong resistance level. You know the price is going to hit a resistance level. You just wait. So when price hit a resistance level, the next component you're going to look at is maybe a bearish engulfing candle. Right, so this is a bearish engulfing candle. Some people use this to actually go for a trade. Right, and the third component maybe you consider. Let me see. I think this is 1 and this is a 2. Right, normally that's how I count it. Right, but some people use an EMA. Right, so if you are using for a short-term EMA, right, people suggest 10 EMA. Right, so that's how they actually go in or consider that. Okay, so these are the 3 components some people use. Some people use maybe a big reversal pattern such as a double top or head and shoulders, right, for a confirmation, right? So if you guys didn't know, right, the most accurate reversal pattern, right, is head and shoulders, right? I actually tried this many times. So head and shoulders probably have like a 90% or 80% probability of it happening. Double top, not so, right? Because it can actually form a triple top, right? Or maybe you form a double top and just go up, right? But a double top shows that, price hit this resistance and this resistance remains very strong, okay? So just a very brief, go through, right, to actually talk about it. Yes. So, yes, I think it just brings to a very good point in the sense that it's very important to understand, right, that in terms of candlestick patterns, right, the 15 minutes, 5 minutes, 4 hour daily, right, if you look into it this way, the 5 minutes is definitely weaker than 15 minutes, and the 15 minutes is definitely weaker than the 4 hour. The 4 hours weaker than daily. So if you see a bearish engulfing candle on a daily, right, then it's damn accurate. Okay, or 4 hours is very accurate, right, compared to a 5 minutes and 15 minutes one. So the probability of it happening increases, right, as the time frame, as we go further, what is it called, right? Go, a higher time frame, right? So the lower the time frame, the less accurate of the probability of it happening, right? The same for support lines and trend lines, right? As I always say. So this is another one piercing in dark cross patterns. Right, so don't worry about this. Later I'll show you on a real chart, right? So that you guys have a better understanding of what we actually look at. So this is known as the morning and evening star, right? So this entire thing, this three candlestick pattern is known as the morning star. This is known as the evening star, sorry. And the one below is the morning star. Right? So the reason why I'm going through this very fast is because I want to show you guys on a real chart. Okay, the morning and evening star, right, the bullish and bearish engulfing, so you guys have a better understanding of it. You don't have to worry if you guys don't really get it now. Right? So this is known as a shooting star and hammer patterns. Right? So this is known as a hammer. Right? This is known as a hammer. Right? Let me show you this. This is a hammer and this is a shooting star pattern. Okay. Not important to know the name of it. Right? I think the more important thing is to actually recognize the recognize the three candlestick patterns that form. Okay. Okay, we have 5 more slides, right? So I'm gonna try to go as fast as possible because I think, right, that it's pretty easy. All of this, right, for those who are new, right? Obviously, green is more bullish, red is more bearish, right? The size of the body means that the greater the size of the body, it shows that the more bullish it is. Okay. The longer the wick, right, it shows that that maybe not very clear on which trend it is leaning towards to. Okay, all this, right, I will just use chart to show you guys. I think it's much, much better. Some things I don't think is that essential, right? And we don't have much time, so therefore I'm going through this relatively fast. If you guys want, if you guys spot something that you guys want me to go more in depth into, be sure to stop me anytime, all right, guys? Okay, this is just the different kinds of entry which you guys should have. Right. Yeah, sorry, I'm going things that I don't think is that important. Okay. Okay, so for now, right, let me just do a very quick to show you on chart, right, which I think that is more more easier to understand in a sense. Okay, so what I do is normally I'll have you spot some patterns here, right? So one look at this, right? This can be called a morning star, right? This is a double tweezer bottom, right? This is a double tweezer bottom, right? And this is a double bottom, okay? So double tweezer bottom, okay, the first valid one is you have the same height, right? it's the best. Okay, so what does that mean? Right, it means that, let me just show it to you guys, okay? So a double tweezer bottom, right, should have hopefully the same body length. Okay, so I'll say that this is a very valid one, and this is a very valid one, and this is a very valid one too, right? So this double tweezer bottom shows that, hey, the price is going to bounce off from this support level. So if you actually look at your support, right, this is a very, very clear support line, right? Never break for very long, right? So this is a very valid double tweezer bottom. So if I actually want to think about it this way, right, I can consider this support line as one confluence, this candlestick pattern is another confluence, right, and maybe another bounce. A bounce off this support line is the third confluence. Okay, so this is something that you guys consider, right, as three confluences. Right, next one I want to show you is the morning. So this is a double tweezer top, right? You can see this is the same body, right? Very, very nice. Right, so let me show you some other candlestick patterns. Okay, if you guys, okay, I'm going to go through every single candlestick patterns, right? Not every single one, the more big common ones. Right, and if you guys are unsure, just stop me. Okay, just stop me that if you guys think that that's not enough example, right, just stop me, okay? So that I know that I have to go through it further or look to more patterns. But the bounce candle must engulf. No, for a double tweezer bottom, right, it's the same, right? For a bullish engulfing candle, yes, you have to engulf it, okay? So there's a difference between these two candlestick patterns. I do understand that there are some bullish engulfing candle as a candlestick pattern, right? And I think it's pretty accurate also, honestly, right? So let me just show you one bullish engulfing candle, which you can find, right? So this is a bullish engulfing candle, right? You can see that the blue clearly overwhelms the red, right? And this is a very nice morning star, right? But this is clearly not on the support line, or I would say there's a very strong support line. So I won't call this one. Okay, this is a very strong support line. You just break through it, right? So normally for me, right, if I go in for this kind of trade, obviously I have a hindsight advantage right now, right? But if I go in for this trade, yes, I'll go in for this trade once I see this candlestick pattern, right? And then I will go for the next graphical overlap maybe, right? Which is a very good, well, this is quite a lot of money actually, right? It's $60, right? But yeah, I will go through for a very next graphical overlap, but you can see that it didn't reach, right? For this, right? So once it actually break this level, I'll just close off my position, right? But normally, right, I think this is a very nice level. Okay, I reach a graphical overlap resistance level actually. Okay. Or I can consider using this. Right. Yeah, but for this, right, particularly for this, I don't think I reached my TP, right? But it's okay, right, guys? I realize it's a game of probabilities. If it's wrong, it's wrong. If it's right, right, then you're going to be profitable. As long as your risk-reward ratio is good. Okay, so for this, right, if you ask me to trade, what is my risk-reward ratio? Right, so for one, I'm going to enter a trade here, right? Personally, as a trader, right? Then I'm going to put my take profit here, as I said earlier, right? I'm not going to trade it, right? Whether it reach or not, right? Whatever, right? So let's just say it didn't reach my TP, right? It didn't reach my TP at all, right? So let's just say, I'm not looking at the chart and stuff like that, right? And eventually break my level right here. So my stop loss, right, will be somewhere like, if I'm not looking at the chart, my stop loss will be here, right? Very nice level right here, right? If I'm looking at the chart, once I see that this candlestick happens, I'll just close off my position, okay? Because it already break my support line, okay? So this is how I actually trade. If you guys want to have an understanding of it. Right, so I already showed you double tweezer, right? Okay, this is a very nice morning star. Very, very nice one. So a morning star shows something like this. Only when the price closes, right? If that's your question. Do you put a stop loss right from when you enter or when your price goes against you? Okay, this really depends on what kind of chart you're looking at. Okay, it's very realistic, right? We're looking at 15-minute charts. It's very realistic for you to put, for you to look at the chart, and decide where the stop loss would be, right? Using eye power, right? So I won't put a stop loss, right, when I'm trading a 15-minute chart. Instead, I will look at the chart, right, and see, whether the price is going to go against me or not, right? But a daily chart, if you're not scalping or swing trading, right, then obviously, right, you cannot possibly look at a chart every day or every time. Right? So for that, I'll put a stop loss. Okay. So this is a morning star, okay? As I said earlier, a very clear reversal pattern, right? But obviously this is not a very strong support line, so you cannot say that this is therefore you have a stop loss, I mean for 50 minutes or for 4 hours. Is it for 50 minutes? I'm pretty sure you're doing 50. Yeah. Yeah, I understand also. Okay. There are cases in which, wow, there's this very big ass very, very, very long bearish candle. Let's just say I'm longing, right? There's a very long bearish candle, right? But I have said in my previous webinars that price have a tendency to go back to test our resistance, right? And I have showed you guys that it happens like most of the time. Okay, when this there's a time. Okay, let me just give you a very nice example. Okay, on my losses, right? So let me give you this story. Okay, so there's a time, when I'm going for a trade, right? And at the day, right, was PPI, right? Price Producer Index or Producer Price Index. I can't remember what's the exact name. I think something like that. And Producer Price Index have a tendency not to affect the market that much, right? It's the CPI that matters, right? But I didn't realize that, before this PPI, there was this after this PPI, the next day was FOMC meeting, right? So this PPI actually have a lot of weightage. Right, and this PPI data shows that it's very bad for prices have been increasing like mad, right? So actually that day I was on a short, okay? I was on a long, I was on long for gold, right? So but PPI shows that it's very bad, right? So prices for producers have been increasing rapidly, right? So in that sense, right, the next day is FOMC, right? So you can expect the Fed to actually tighten monetary policy. So that day I was on a long position, right? Because the chart says so, right? But then, right, because the PPI data shows otherwise, right, and it went against me, right? So it dropped like $50, within like 2 candlesticks, okay? And that was insane. The first candlestick dropped like $10, right? And I didn't react because I thought that, hey, price is going to retest my resistance, right? Obviously, it was a stupid mistake. So what happened was I bought the dip, right? I bought the dip because I think that it's going to retest either way, right? So I want to minimize my loss, right? Yeah, okay. So the story goes like that. So it dropped like $30, right? If I remember correctly, yeah, it dropped like $30. Then eventually, right, when the market cools off, right, the market, the initial reaction is always the biggest. I always tell you guys, right? So we normally trade the initial reaction, right? So it actually went back, right? So it actually went back, right? Not to my resistance line, but to the next resistance line, right? So at the point of time, I actually bought the dip. I bought the dip at every $10 per every support levels, right? So when you go back, right, I actually lost like only like $60 or so. That was a very small account, right? That was a 1,000 plus account, if I remember correctly. Yeah, I normally trade on 50 minutes. I will use a smaller account because it's more volatile, right? So I didn't close my position because I thought that it's going to retest all the way to my resistance. I was greedy now, okay. Then it didn't happen, right? And after it tested this resistance level, it actually did, okay, and it didn't close. So I lost like $300 or $400 a day. But although I can lose like only like $60 a day, but I didn't want to take an L. So yeah, it's a quite important lesson in terms of that, right? So it's very important to know what kind of news you're trading into and what kind of major events you're trading into, right? So my suggestion for you, for those who are not trained fundamentally, right, it's okay to actually it's okay, right? It's okay to actually take the L in some cases, right? Or just don't trade, right? If you're not very sure fundamentally. Yeah, luckily it's a small account. If it's a big account, I think I'm screwed up, honestly. Okay. So that was a bit of story time, right? So let me just go through further. This is the morning star, right? This is the bearish engulfing candle. You can see that the red clearly overwhelms the green. Okay. Let's see. I want to find a very nice one for you guys. Okay, this can be considered an evening star, right? This is a morning star, very nice one. This is also a morning star. So if you realize that the daily morning star always shows a very nice reversal, a very nice change of pattern. All right. This is a bearish engulfing candle, right? So you can see that very nice pattern. Obviously, that's the hindsight, right? So if you don't want a hindsight thing, right? So this is a continuation. You can see that this is a resistance level, right? And we are waiting for a break. I'm actually waiting for a break for this. Okay. Gold analysis today. All right, today comes to report. Okay, so it's going to be relatively harder to explain to you guys, right? But just from charts alone, right, I expect it to be bullish. Right? So you can see the reason is very simple. The reason is that this actually, is a bounce from our daily trend line, right? And you can see there's a pattern continuing upwards, right? And this is a very nice resistance level, right? So normally, right, just from chart alone, right, I'll consider a short, right, from this position. Right. Once it touches level, I'll consider a short. But obviously today is going to be a bit different. But as I said, it's very important to take into consideration the major news events that's happening. Right. Okay, let me change this to purple. Let me just show you how I normally trade. Okay. Okay, so I normally trade gold, right? So that's a very nice good question to ask me because I always trade gold. Right. So this is a very nice instance. So you can see that it's actually trading in a range in a way. Right. Then okay, I'll just put this as a 4 hour. I'll put this as blue. I'll do another purple line. So the next resistance, right, for this, right, is about this, maybe this level right here. Right. I'll put this as purple too. Right, so you know that these are all key resistance. Right, this is the big resistance level. So this is what I'm looking at. Right, so just from this analysis alone, right, from daily chart, right, I expect a bullish continuation. Okay, but for chart, because it's hitting a very clear resistance level, I expect a bullish reversal, a bearish reversal. Right, so I'm actually, because of report today of CPI, right, actually waiting for Candlestick to break this level right here before continuing its trend upwards. Right, so today is a long for me, right, based on economic reports and fundamentals, right? But if today there's no report or there's no fundamental news, it's a short for me, okay? Obviously, fundamental news can be the geopolitical tensions in Russia, Ukraine. That also can be a fundamental news, right? So I'm actually waiting to see is there any form of reversal patterns here on the 50-minute chart or on the 4-hour chart, okay? So if there is, I'll go for a very short scalp, right? In the sense that I'll go for a short. Okay, so let's just see whether it breaks this level. So now, maybe, right, it's going to reverse from here, right? So if you want to go for a very short scalp, right, just go ahead because it's a very nice level to look at. And this is 50 minutes. So I'll put this as break. So let me give you a very brief rundown of what I'm going to go for today. Okay, so for today, I'm actually waiting for a break of a resistance line. But if this breaks, I'm going to go for a long, right? If you guys are trading on a daily chart, right? If you guys are trading on a 4-hour chart, it's the same thing for me, right? Obviously, for a 4-hour chart, right, it's a very clear resistance level, right? So if you're actually trading, right, before CPI, maybe you can go for a short from this position here, right? And if for 50-minute chart, right, it's a very short scalp, right, to this level right here at 1954, right, a $4 scalp. Okay, scalping. Okay, so if break, then you wait for retest or no? For CPI, I don't think I'll wait for a retest. I'll wait for a candlestick break. Unless this, okay. The only reason why I wait for a retest is because this candlestick is very long. Right, then there's no reason for me to go in for this trade, right? Because it's already halfway through its action. Let's just say it's just a small break, right? Then I will just go in for a trade. Let's just say it's a big break, I'll wait for a retest. Okay? Okay, HS? Do you understand roughly, right, what I'm looking for today, right? Because today there are major news events, right? So it really depends on what time frame you're looking at, right? For daily, I'll wait for a break of resistance. For 4 hour, I'll do a short. Now, I'll do a short, like once it touch my level right here, right? And for 50 minutes, I'll also do a short like right now. Okay, it really depends on what level you should look for. Okay, so with this, right, I come to the end of the webinar. Right, you have 3 minutes left. Are there any last minute questions? Do you guys want to ask me? Stop loss where? For which one? For which chart? 4 hour daily or 50 minutes? Then you really just eyeball it. If you break, then you just close it. Page 4. Page 4 is not reasonable to ask you to do that. Okay, stop loss, if I want to put it somewhere. Wow, this stop loss will be rough. Okay, let me just show you mine. If I want to trade this 4 hour, I will do something like this. But honestly, I don't think you should trade the 4 hour today. If you ask me, if I want to take my profit, I'm going to do a very short one. Right? And my stop loss will be somewhere very, very near. I will go for it for this trade. Yeah, definitely not. Honestly, if I look at this like that. But if it's normal times, right, I will just go in for like that. Right? You can see this is a very big price movement. Right, and then I'll probably look for really not very nice at this levels right here. I think this is a one to close to 1, which I don't like it. I don't think this trade is good. But if it, if I have to go in for a trade like that, right, I won't go in. But this is where I'll put my stop loss and stuff like that. A 1 is to 1. This is probably look like a 1 to 1.5, right? I don't like it. Anything regarding the number 1 and 1, I don't like it, right? I think a TP here is already very reasonable. For the daily chart, right, if I'm waiting for the break, right? For the daily chart, I'm waiting for the break, right? Which I already said is here. It's also a 1 to 1. Yeah, everybody said a minimum 1 to 2, right? I also suggest a 1 to 2 or 1 to 3. But it's very hard to find 1 to 2 setups, right? I think the 50 minutes one is, I think scalping, honestly, if you ask me, right? I think it's very nice for candlestick trader. But obviously, scalping will give you heart attacks, right? That's how it normally works. Okay, guys. So if I assume there's no last minute questions or any last minute questions, I'll just end my webinar for today. So tomorrow and Thursday, I'll also be taking the webinars. Right? So tomorrow will be on crypto, right? So we'll do everything crypto, right? Well, you guys can ask me anything, right? Anything regarding trading, right? Crypto, anything about what do I think of this crypto? Obviously, what do I think of this crypto? What do I think of this stock? Right? If you guys have that kind of questions, you guys can ask me too, right? I want to do a very quick rundown of myself right now. So when I first started, I trade on fundamentals before technicals. Right, so fundamentals in the sense of trade on intrinsic value of a company and trade on macro analysis. Or you break your 15-minute mark. Right, so before this kind of close, right? If you close, you can just go for a long to this level. Okay, sorry, just a very brief diversion. Right, so yeah, I trade on fundamentals and macro first, right? Before I just started on technicals. Right, so I'm profitable on trading on fundamentals alone. Right, on technicals, I'm also profitable. Right, but it took me some time. So just be patient with yourself. Okay, guys. Wait for it to break. Wait for it to break before you actually consider this long. Wait for it to close. Sorry, no, wait for it to break. Wait for it to close before actually going for a long. Okay? Okay, guys. I'll see you guys tomorrow. Right. Stay safe and trade safe. It's just one day. CPI report. Unsure, please stay out. Okay, CPI report fluctuations are crazy. Okay, there'll be like $30 movement suddenly. Okay, guys. See you guys.